gonna start shortly. All right. Hello. So this week's live stream will be regards the indicator multi-time frame average ABR, which is average bar range. So I will walk through the settings and guidelines, how we're utilizing and what benefits it provides you and how you can apply it in your charting. So multi-time frame average bar range, it gives you the, for any time frame, it gives you average bars range, as it says. It basically gives you the how much pair is moving, that specific pair on the specific time frame. You know, what is the average range you can expect that pair to move. Here on AeroUSD, you can see settings, it says 30 days, so it basically tracks last 30 days, and in last 30 days what is the average range, and you can see on the chart it's gonna plot you the ranges. So you can see on this specific, on today, the average range for the AeroUSD is 57 pips. So you can see last Friday it was 57, prior that 57, 58, 58, 58. So last 30 days it tracks last 30 days, and it gives you the, on new day it gives you the levels, you know, from the low of the day or high of the day. 57 pips, that's the average range. So at the moment from the high of the day, if we move to forecasted average range on the AeroUSD daily, you can see it shows 57 pips. Same for a high, so if this is true high of the day, we target 57 pips as the average bar range. On the table itself, so basically regards the first settings on the chart, every new time frame, like let's say if let's cover just on daily, so we choose average bar range on daily, so you can see it can be applied on any time frame. You can track the weeklies range, monthlies, quarterlies, yearlies, so on. So average bar range lasts from last 30 days. You can use 365, it will be last average bar range last year, last 3 months, and so on. What's your look back, how long you want to see the average for that pair. This indication here will give you the info regards the each setting. So this allows only to show the table. If you want to, if you have some kind of screener setups where you have utilizing multiple, one chart just for the screeners, you have some multi-time frame screener there, you can utilize the screener as well for multi-time frame average bar range. So that could just allow you to just see just the table itself. So average bar range time frame, so you can choose whichever time frame you want. Look back, whatever, 130, that will be 1 month, 90 or 3 months. So on the table itself, so this is the tickers. So basically you can track up to 39 tickers. So you can track up to 39 tickers of the pairs markets, so which you want to see. Here in the settings we have 3 columns, 1, 2, 3. So you can choose ticker set 1, 2, 3. So that will be first ticker set, second and third. So basically it allows you to change. So if I choose ticker set 2, let's say for me the first column will be Forex, second will be the crypto, and third will be for stocks. So now I can literally change the, as you can see, it's changed. Now I'm checking the average bar range for 39 crypto pairs. You can do same for stocks, and you can change any pair with you like. If you like to track, let's say, nearly 120 pairs of the stocks, you can change every single ticker to different stock or different currency, different crypto or whatever, and you can track the average bar range on that specific asset on the table. So that's regards the ticker sets. Table color and text color is changeable. You can adjust whatever color you like, and as well table height, so it's adjust the height of the table if you're opening on the mobile app or something like that. So next is to reach average bar range percentage. What does it mean? So let's cover first what specifically displays the table. So on the table, like I said, you have first column with all assets, with all the tickers which you want to track it, let's say. 30 day, that's the look back. So basically if you tracking last 30 days, that will be like daily average range for last month basically. And then next column will display you how much that specific pair averagely moves in last 30 days. As you can see, OutCAD is average bar range on daily time frame 47 pips. So this allows you to filter through the markets and focus maybe on only huge moving pairs. So I'm not gonna be fascinating to trade maybe some kind of arrow which moves only 40-50 pairs. Sometimes on average is like, say, you can see here it says 57 today, where you have a GBP AUD which moves averagely 100 pips. So for me, doing the technical analysis on same two pairs, I rather choose from two pairs, pairs which moves 80, 90, 100 pips. So with this tool, you can literally, focus on specific filtering out specific pairs you are interested to trade. So it allows you to filter out. So next is little tick box. So what the tick box mean? Same as tick box you can see on the screen there. So basically that means it says tick box and 100%. So if in specific day, so basically let's say on this Friday, as soon Friday opened, we had a projected average bar range from as soon market dropped from this low to this high, you had a line, or whenever we had this high, we had opposite side the line for short average bar range distance. So if market from the low or from the high, like either from the low or either from the high, reaches average bar range, it's gonna have a tick box. So it means it's successfully reached 100%. That's that 100%. It says it's successfully reached 100% of average bar range. As soon as it's done, it's got the tick box. So let's go to this OutCAD. So we just cover on the same pair with the first one, so I don't need to look where is AUD, Aero USD. OutCAD. Hello everybody. Today I will cover the multi-time frame average bar range tool, the settings, applications, and how you can utilize and use it. So feel free to drop the comments. Later on we can check some pairs. So OutCAD moves 47 pips, so we can say it's forecasts what is the average bar range from the low to high or low or high to low. Why we using from low to high and high to measure the range? Because mainly in Automa we are focusing on the setups which is low the range, high the range. If you are the trader who trades daily range, we always gonna focus lower the day, high the day, low, high of the day, low of the day, low of the day, high of the day, and so on, so on. So that's why significance of high of the range, low of the range, for us to track what is average range for that specific time frame if you're trading daily, let's say. So here in AutoCAD, again, we will have this tick box whenever we reach the average range. So this was down bar, so it's gonna color red. If it's up bar, it's gonna color green. So in this day, Friday, we reach from high of the day, we reach average bar range 47 pips. We got tick box. So that's that 100%. So if you adjust, so that's 100%, and that's average bar range, and tick box here in table, in chart, tick box will mean whenever it's reached the average bar range, it's gonna get tick box. On chart, on the table, you can see tick box, and for AutoCAD it says 12 times, and 100% it says 40%. So what does it mean? It means from last 30 days, that's the look back, for last 30 days we hit 100% average bar range 12 times. So 12 times of 30 days, it's 40% of the time this pair, AutoCAD, 40% of the time hits the 100% of average bar range. So we can, this way, we just not tracking the pair, we're not just tracking how much the pair is moving on specific time frame, like, so now we're covering daily range, so we can see how much each pair moves in daily range, and now we can track, okay, what is the success rate for that pair hitting the average bar range on that, on daily time frame. So we can see there is like 40%. Let's see, there is Euro GBP, which is 17%. It's absolutely weak. Look at the range, 27. So where is the point of trading Euro GBP, which is 27, if you can trade GBP, which is 100 pips? So there is specific, we cover under risk management, and under what pairs to trade and which sessions to trade, and ABR tool is really helpful for that. As well for your entries and managing your risk, tracking average bar range, let's say on 1 minute, 5 minutes, we're gonna actually cover that, some examples. So which pairs really, hitting that 100% of average bar range? So we can say it's AutoCAD is 40%, is any outliers? Okay, GBP, CHF as well 40%. NZD, GPY 40%. Silver hits average bar range 50% of the time. So last 30 days, silver hit 50% of the time, 100% average bar range, which is huge. 100% to hit 50% time, that's huge. So this helps you what? It helps you, as I said, most of us focusing on high of the range, low of the range, high of the range, peak formation, time rotation, and average bar range level allows us to target that specific levels. So let's say we picking some, let's say this day, just cherry pick. So if we had a setup, let's say in London, like here, so we can see we have high of the day, and on London we put high of the 8, multi-time frame order flow, we have peak formation high on hourly, or perhaps hourly peak formation high, and at this point, because of high of the day, as soon high of the day is there, we will have this line marked on chart saying, okay, that's the 47 pips average range. We're not gonna just blindly hope it's gonna go there. We always want to link that average bar range level, we want to link with the liquidity, basically asking, because liquidity is the fuel for the market. So basically for us saying, is that high is true, is there a reason for market to drop down? Basically we're asking, is there a liquidity for market to target? So that's mean we linking this key level average bar range on daily with liquidity. So we say, yep, we have liquidity there. So if that's true high and that's reversal, daily open is failing, we start to confirm bearish candle. If the we develop bearish candle, what's the fundamentals of the candle movement? Candle can only go up and down, as that's the fundamental truth. And if we know that candle is starting to develop bearish, we have a sign of weakness at high of the day. Daily open fails, peak formation, high of the 8, high of the day, multi-time from order flow. We know, yep, we have sign of weakness. This day is targeting. If this day is reversing, what is the daily's range job? Daily's range job is to take out previous day's low, right? Previous day's low, and that's probably low of the week. That's Friday, perfect. That's Friday's template, looks like. And that's it. So we know, okay, that's high probability that we're gonna hit 100% average bar range. So we link the key level with liquidity. Nice. So that's one of the examples. So at the same time, you will say, okay, I see many pairs, like many days, let's say for the same pair, many days, it doesn't reach 100% average bar range, but it's reached pretty much like 75%. So what we can do, you go to this setting which says to reach 100% average bar range, we can change, let's say 60%. So now table gonna recalculate and will show you what is the statistics for reaching 60%. It's not gonna change on the table. On the table is gonna stay the same, your average bar range for last 30 days on daily, yeah. But on the table, it's now gonna show you, okay, 60% of the time, like 60% of average bar range in last 30 days, old CAD hits 70% of the time. So 21 times of 30, we hit 60% of average bar range. So now we can go again through and you can filter out outliers and again look for the ones which really hitting that ABR. So we have OutCAD 70%, OutNZD 70%, CAD CHF 70%. So now if we pick some kind of pair which is huge mover, like 100 pips GBP NZD, and it's 67% hits that 60%. So we know 67% of the time you guaranteed 50 pips from high of the day, low of the day. So it's based on statistics. On statistics you can tweak the settings and see, okay, which ones are the really movers, which ones are the ones who gives you the range, huge range, and which ones are the ones who reach that average bar range basically. You can do so basically rest of it's so okay, highlighted. So why you can see some of them are blue, some of the highlighted blue numbers there highlighted as per this indication there, blue highlight volatility increase. So it means that whenever you have highlighted letters or highlighted market stickers, pairs, it means that pair in that specific day has increased volatility. What does it mean? It means we start to get increase in the range, like you can see here, like we have a 41 pip range, 42, so we increase, so it comes blue, so it's okay. Volatility start to pick up, 42, 43, 43, blue 45. So it basically tracks that volatility, the range start to increase higher, so higher. So it gives, because when you're gonna go through and see the ticker marks, the most of the time they will be on the highlighted blue days. Basically when we have a market start to move, it start to trend, it start to break out, start to trend, we getting that. So it allows us as well filter out the markets. It allows the filter out the markets. Okay, I have GBP NZD today is highlighted, so it means okay, there is higher volatility today on the specific pairs. So It's not allows you only to pick the pairs which moves the most. It allows to pick the pairs which has increased volatility on that specific days, and as well you allows you to pick the pairs which hitting that ABR most frequently. So at the same time, like I said, you can apply just on daily. You can go and, because maybe you are something who is swing trader, maybe you want to focus not just high day low day, but you want to focus on high of the month low of the month, and maybe focus on let's say what's called swing trading. So now it will give us, we go back to this 100%. So now it gives us all pairs on monthly basis. So it gives us monthly ABR. So it gives us last, let's say 12. So we cover last year. So last 12 months we will check, okay, what's the ABR for monthly range. And again, it allows you to go through the pairs. Let's see. So we have some, it's probably gonna be pretty much the same. So you can see GBP and ZD 600 pips a month average range, comparing with like Euro GBP, which is 155. Again, like last 12 months, how many times we reached the 100% of the monthly ABR. You can see some is like single digits, like 8%. Some outliers comes like 33%, which is crazy huge, like 4 times of 12 months. Oh man, NAS 100 6 times of 12 months, man. That's EU 50 silver. So let's check the NAS 100. It's the same, completely. Everything is the same. Everything is the same. It just again marks average range. Yeah, beautiful. We already reached today. This month for NAS 100, from the high of the month, we reached the ABR of the monthly. Beautiful. So, and again, could this, you're not gonna want to target the ABR level blindly. As I said, you want to link with the liquidity. You look at the left. Okay, we had this monthly structural point, liquidity, and last 2 months as well, smaller degree liquidity. So beautiful. Same thing, you can go and check small time frames and so on. So it's applicable for any time frame, absolutely any. You can go from monthly, whatever. So another good application for the tool is to see, let's say you are entering into trades on 5-minute time frame, let's say. So it allows you to, so if you are somebody who focus like on 1-bar entries, because for us our high of the range, low of the range trading system, we are focusing on trigger bars, entry bars, and that's basically 1-bar entries. 1-bar entries. So how ABRs on 5 minutes helps you. So basically, if you know your range for, if you know your ABR for 5 minutes, so let's say last week's time, so we have a 60 minutes, that's 50, that's 12, that's 1 hour, 24 hours, so 12, that will be 1 hour. Let me calculate. So we have what's called, so 12 candles times 24, that's 288 5-minute candles a day, and let's say a week times 5. Okay, so ABRs for last 440, so that will be last weeks. So basically weeks, 5-minute ABR range for last 5 days basically. So let's recalculate. Okay, so calculating last 5 days 5-minute ABR. We can see on again NAS 100. Where is the NAS 100? NAS 100, that's 18 pips. And maybe let's go back to whatever. So okay, so for 5 minutes, so how it's useful for entries. So if you're entering in one bar entries, if you have 1 bar entries, and that's your, like for us, that would be our 1 bar entry, like trigger bar. So basically that's your entry, and you know your invalidation is your, you know, hive the day. So basically that's hive the day, time rotation, sweep, and that's, you know, entry bar, you know, bearish engulfment, something, bearish pin bar, take trigger bar, time rotation, hive the day, peak formation high. So if that's entry bar, we say okay, which pairs has a ABR, like what's pair on ABR on 5 minutes. Let's say on this NAS 100 is 18 pips in 5 minutes. So we're using risk management system which calls partial risk free. Basically we meaning if that's, you know, first down bar, we want to see, you know, previous 5 minutes to be taken out. So we basically checking, if we are utilizing 5 minutes, we're checking does my risk management falls under 1 bar's ABR, if that makes sense. So basically, let's say I'm frequently trading Euro USD. Where is it? Euro USD, like 5 minute bars range is 3. So basically I'm saying if I'm entering on my trigger bar, can I mitigate my risk in 1 bar? That's mean, can I mitigate my risk in 3 pips on 5 minute bar? That's basically meaning if your stop loss is 3 pips, that means you mitigate your risk in 3 pips, and I know, okay, in 1 candle I can mitigate my risk, and that's mean I am covering myself just in 1 candle. So hope this makes sense. Basically, you know, you can utilize lower time frame ABRs on 1 minute, 5 minutes to manage your risk accordingly with 1 bar entries. The rest of this mechanics is completely the same. Doesn't matter of time frame. It's, you know, shows you the statistics, how often if you're somebody who is scalping, you know, maybe you are the one who want to scalp, you know, 1 hour S3s, you know, stage 1 to 3 time full rotation of 1 hour ranges. So you can utilize simply 1 hour ABRs for, you know, again 24, like let's, you know, last days, like on last day's time, you know, what is the ABR for 1 hour, and focusing on that scalping, you know, higher the hour, lower the hour, stuff like that. It's going to be completely the same principle. Same mechanics, shows you when you have a increase in the volatility, when the ABR of the hour will be hit. Looks like this is really, well, in this downtrend, yeah. And then marks the ABR of that hourly on short and long side. So sorry, hope this helps. This will be one of the videos regards the guidelines of multi-time frame ABRs and how you can apply for targets, how you can apply for targets of your, you know, either intraday swing, your targets of specific range, and, you know, so yeah. If any questions, let me know, specifically for ABR. The same highlighted pairs comes up as well on the signal box or multi-time frame screener signals in the Discord. It comes up as VLT plus as the explosion sign. It basically comes up that specific pair and that specific day or that specific range, weekly, monthly, daily, 8 hour, 4 hour, has increased volatility. You will see signature VLT plus. That's same as ABR highlighted. It's not highlighted, is not blue. Highlighted is not when it's reached the ABR. When it's reached ABR, it will have a ticker. On table, when it's reached, it's gonna count up the ticks. But whenever ticker is highlighted, that means that day or hour or week, or whichever time frame you use, that time frame range has increased volatility. So it's high probabilities for explosive move. If there is no questions regards ABR, we can check some market movements utilizing Automa. We can check some market movements. How is the market setting up today? Automa tendency separator. So this is NAS 100 Monday. We have high of the day, high of the week set up into the power index on 8 hour. Interesting. So we have breakthrough the 50-minute power index. So aggressive sellers is taking over. So on 50 minutes, what we want to see obviously hourly time rotation, which will be either, that's the hourly open. So could be scenario like this into 50-minute power index, mitigating this, coming perhaps lower. Weekly open is all the way here. So where's the last week is coming out? Just let me quickly check higher time frame. Any pairs you want to guide to? Any pair specifically you want to check for me to check? Just let me know in the chat. So what we can see, let's see the monthly range and where we are in monthly structure. So basically this drop for quarterly open all the way down to retesting at the moment previous range high breakout on the yearly. So this is the previous month's range. So what we done on current range, we tested the monthlies open multiple times, had the monthly peak formation high, breakout, failed, continued, obviously sign of weakness. At this point we were bearish because monthly, quarterly start to confirm developing bearish side. So from this level we want to see taking out previous month's range, right? That's what's happened. We dropped through monthly's power index, aggressive seller stepped in, rejected, high of the week, all the way drop. So now we have a low of the month at the key level, previous range high. Beautiful. So now we want to see on lower time frames. On lower time frames we have exactly at that key level, rejection, breakthrough the 50-minute power index and 50-minute aggressive sellers on 50 minutes, exchange the hands aggressive selling into aggressive buying, providing higher price on 50 minutes. Into the weeklies power index, so aggressive buyers stepped in on weeklies. Multi-time from order for low the month, low the week. So if this is the first bullish week, what we want to see, obviously for higher price, where's the liquidity? The first liquidity, we have this 8-hour structural high, this 8-hour structural high, is there was entries for on 50 minutes on London, loved 8, multi-time from order flow, loved 8, love the day, love the week, love the month, love the week, love the day, love the 8. Nice. And we have, that's 9 a.m. London's. Now that's probably like maximum 1 hour peak formation low. That's 9, that's 8. Yeah, this will be 1 hour peak formation low. 6, 10, yeah, 1 hour peak formation low. Into weekly's peak, or like low the 8 into the key level, weekly's power index. Could drop even to yearly's open, retested intentions. Either key levels you want to see on the key level, lower time frame, liquidity sweep with trigger bar. How about the oil? Jesus, huge cluster of key levels. We have failed market structure breakout on the quarterly, quarterly is open, and we have a monthly peak formation on inside range on monthly. Yeah, nice. Not on monthly, perhaps quarterly. Yep, we have quarterly inside range, and it's been taken out. Quarterly peak formation, high coming from inside the range. So over here we have 1 hour power index, basically tracking aggressive buyers into aggressive sellers, aggressive buyers, aggressive sellers, aggressive buyers taking over, supporting higher prices, fails, drops lower. Let's see on 15 minutes on small time frame. You have huge liquidity pool right down there. Huge liquidity pool. Look at the last week's Thursday. The drop. So last week, Monday, Tuesday. So we failed. High of the week, peak formation high on daily. Golden template, high of the week, peak formation high on daily. Weekly is golden template. Daily is open failed. Stage 1, 2. Targeting low of the week and previous week's low. Previous week's low is this one. Which already been taken out. So not the best setup, golden template, but we don't know is it retracement open, go higher because of low of the week is coming out of peak formation, low and weekly. Obviously next day, which is Wednesday, high of the day into that weekly is open, which is key level. Open price daily fails, producing bearish daily range. And London's high, the high of the 8 pushes into the key level again. High of the 8 into key level, daily is open. High of the day into key level, weekly is open. Beautiful. You can see already peak formation right there. Sweep, drop exactly to the daily structural. Drop further exactly to the 8-hour structural liquidity level. Next day, open fails, high of the day setup, golden template, dailies high, good dailies, golden template, high of day, 8-hour peak formation high, right there. Target, previous 8 low, which is already structural liquidity, takes out, drops further to the fucking dollar of old 8-hour structural level. Perfect. Perfect. 15-minute aggressive buyers, sellers, exchange hands with aggressive buying, drops. Perfectly, we love to see this power index stepping up and breakthrough mitigating, showing aggressive buyers supports higher prices. Nevertheless, low of the day, low of the week. What we want to see? We want to see, you know, for golden template, obviously 8-hour peak formation. At the same time, low of the day, 15 minutes, you want to see that first trigger bar. Trigger bar will be time rotation. So that's 11:45, at least hourly. It doesn't give you, it rejects. The earliest trigger bar would be this engulfment right there. So low of the week, 1 hour time rotation, 15-minute power index reclaimed. Look for higher price. So obviously low of the day you want to see open price to reclaim for higher price. Friday. So Thursday we close above daily peak formation, this blue line there. So we have low of the week, peak formation low. Beautiful. Again, golden template and weekly. Next stage 1, stage 2. We run out of time. Next day opens stage 2. We're targeting from Asia's low. We will target this to finish sequence on stage 3. As soon we break above this high, we can see 8-hour market structures breakout, so we can anticipate for high prices. If that's 8-hour market structures breakout, what is market structure's job? Take out all liquidity. So if that's 8 hours market structure, where's the 8 hours liquidity? The last one right there. Perfect. 8-hour liquidity, high of the day, 8-hour liquidity into the weekly open. Beautiful. So hive the week, 8 hour, hive the week, weekly time rotation. You have 1 bar entry, trigger bar right there. Trigger bar right there, weekly time rotation. Pin above, high below. Pin above, close below. We have nice structural liquidity storyline flips bearish because we failed to go higher than last liquidity sweep. This is 8-hour power index. Beautiful. Aggressive seller steps in. 8-hour power index steps in. Pin above, close below. Next, push into the weekly open, retest, meltdown. Nice. 100% objective. From this point, we have weekly peak formation low, daily peak formation low, low of the week, weekly peak formation low. That's Monday's template, right? Yeah. Monday's template, weekly peak formation, Friday's peak formation. Comes from Asia creates 8-hour inside bar. We sweep that one. Dailies 8 hours liquidity sweep. So obviously we want to see reclaim of what levels? Reclaim of, yeah, hive the day and weekly's open. Hive day, weekly's open. So let me check Aero. Aero USD. It was a nice setup on London. Multi from order flow, hive day, 8-hour time rotation. Earlier I took scalp long on this 8-hour peak formation on this sweep right there. Break even. Scratch trade, just came back. Partial risk free, came back, take off. Shows kind of weakness. At this stage. On see strength on that 8-hour power index on 8-hour peak formation. Bullish breakout on 8 hours, so it's kinda decisional point for 8-hour structure. And for weekly range you want to see daily open, weekly open to reclaim. And this was Friday was nice. Low peak formation on weekly. Push high. Alright guys, I will wrap it up. Thanks for joining. will be saved as guideline video for ABRs, and see you in the group and see you in the next one.